Okay, I just want to make a quick video about counts on US Canadian dollar, Elliott Wave counts, because as I said on the weekend, Elliott Wave is great as a tool, as one of several tools, but it is not infallible. It is not a science. It is a personal interpretive process, and it's fallible. It's open to many faults, including the users. And it also requires a lot of user and market-based experience because there are a huge number of guidelines involved in Elliott Wave marking, which are not printed down and are not really implied even in books and have more to do with market experience, I think. So having said that, I want to go over 3 different counts on US Canadian, just this chart, because they are all bearish. As far as I can see, this is only bearish, straight there, more or less straight, within a number of months. This is weekly bearish divergence, so it should run for about 3 months. We are only in the second, maybe 4 months, so we have a couple more months to go. I would say 2 more months from now, so it's only 1.5 months in any case. But the bearish counts I want to go over are as follows. The printed one, let me move this out of the way just now. There will be more clicking because I'm on my laptop and I don't have a good microphone. I never bought one in the end. This in-based MacBook microphone has to do. So starting with this count, this is the one I've been running mainly. Now it implies that this current swing here is in wave 5 overall. So I can run this as wave 1, wave 2, 1, 2, 3, 4, 5 for wave 3. Now we have a wave 4 and one more low, probably into the 1, 3, 1s for wave 5, and then a bigger bounce. So if that's correct, that would put wave 5 down here. And we would then see a larger bounce. So all of this would be one swing for a 5-wave move, and we would then see a corrective swing for a number of a couple weeks, probably 2 weeks or so, and then the big move down to follow. So that is one count that I've been preferring. However, there is another count on this, which I want to go over briefly, and that is the probably now more likely 3rd wave scenario. So if I revert to the other view, that we had 5 waves into here for wave 1. There is no overlap here, by the way, because wave 1 ends here where the mouse is pointed at, and wave 2 is a kind of flat. And then wave 3, wave 4, no overlap, wave 5. And wave 4 is small, larger wave 4, and wave 5 into here. So that is the completed segment for the bearish, more bearish scenario. Wave 2 then comes into here, and we are now in wave 1 of 3. So it's basically like I drew in before, wave 1, wave 2, wave 3 into here. This segment is 1, 2, 3. In my opinion, there's a 4 in here on the 15-minute chart, and wave 5. So this is 3. So we're going to see probably a bounce tomorrow, and then a wave 5 post-FOMC. Tomorrow is FOMC news, remember, so there will probably be dollar swings, and this is a dollar pair, and this is probably the weakest of the Canadian pairs. All of the Canadian pairs have been selling off on the BOC governor kind of vocal intervention yesterday, and the huge short position against the Canadian dollar itself. However, US Canadian appears to be the weakest one because the US dollar is a pile of crap, as we all know from zero edge. So, in any case, this count implies that we are near to completing wave 1 of wave 3. And this count, the more bearish one, it also implies that we will see a 3-wave correction after. So 1, something like that, and then down. So I still think we have a good chance of moving towards 134. Maybe not that high, but into the 133s, I think, following the next low, however that appears. So there will be a correction into this. A lot of people are probably chasing it from the break, but there will be some type of three-wave correction. The size of it cannot be determined, but I went over it in today's video. One possible, maybe even likely scenario about a deeper pullback into 134s. But in any case, that is the more bearish view. And there is one other view on this, and that is that wave 2 truncated into here, because this segment is also three waves, and it can be viewed as a very slight truncation. So wave 2 is completed into here, and then we have 1, 2, 3, 4, and 5, and maybe a bounce into tomorrow for wave 2, not that high probably on FOMC, wave 2, any three-wave bounce, and will be sold into for 3 of 3. So tomorrow's bounce could also be quite short, because if this is correct, that we've had 5 down already, then wave 1 is in here. We have a three-wave bounce post FOMC tomorrow and maybe on Thursday. And then we start wave 3 of 3 for the big decline. Now, first of all, maybe that's less likely than the other count, but it is possible. And second point is that because there is weekly bearish divergence on this, and that it's very bearish, that can be justified for the move. So if you're already short this, hold on to it, because it is likely to have a bearish, very bearish move. It's already been 600 points or so from the high. What else? I was going to say that when trends are initiated like this, news events, such as Canadian news events, will often be interpreted as a way of reinstating and invigorating or reinvigorating the trend. So any CAD news that comes out, any Canadian dollar news that comes out in the next few weeks will probably be bearish. That's what usually happens. News that comes out in the middle of trends tends to reinforce the trends, and that's why a lot of traders cannot quite put together the fundamentals and the chart action immediately, because when there's a trend, news reinforces it, even if that news fundamentally should not. That's simply how trading goes, in my experience. And so don't be surprised, I'll do that later, don't be surprised if there's a big sell-off tomorrow, and any CAD news in the future should see a further sell-off. My preferred, of these three counts, my preferred count now, given the size of this week's sell-off, my preferred count is going to be this one now. Wave 2 into there. 1, 2, 3, 4, 5, and then a bigger correction, and then we go down, down, down. So in any case, that's probably my preferred count. 2 into here. I think this has gotten a bit too big for wave 5 overall. But whichever one you want to choose of these three most likely bearish scenarios as I see them, there should be a bounce. The worst case scenario for the bulls or anyone who hopes for a bigger correction is that the more aggressive bearish scenario is wave 1 of 3 is in here, and we're just going to have a short three-wave bounce to about 133 and then down. So basically the main point is this. And if it's that simple, something like this, should have known better right there. Just sell that. That's 3 waves. No questions. All 3-wave corrections to be sold into until we see 125. All right. Bye-bye.